Welcome back to the channel. Right now I have the chart of Nifty 50 and this is the daily chart. So the chart looks kind of interesting to me because it's a serious thing if you have bought around the top today, because that is what wave C end or wave 3 highs tend to be. So you buy in the hope of optimism, seeing a 200 point gap up, 200 150 points of gap up, and then somehow you get stuck in that kind of thing, and that turns out to be some sort of an exhaustion gap wherein the demand doesn't really exceed the kind of supply which is held at those higher levels. So as far as the trading counts or the Elliott wave or the Fibonacci counts are concerned, I would really like to label this as 1, and let's label this as A, and let's label this as B. So we are not really sure at this point of time whether B has ended over here or over here, but for the sake of simplicity, let's take B to the bottoms of around the bottom of around 2560. So if we do that, then we could very well see that you had some sort of sideways movement in wave B, and according to the personality of wave structure, you would very likely expect a deep correction in wave D. So a red bar really tells me that you did really complete this entire up move, and wave C has ended. I couldn't say it with 100% probability, with 100% conviction it has ended, but it's logical to say at this point of time that wave C has ended over here and we are due for a correction in wave D. So what, 1 2 3 4 5, so we had around 5 days of correction in wave B, and it was a bit shallow and sideways corrective in nature. Let's expect wave D to be a bit deeper, and time wise it's possible to take maybe more than 5 days or less than 5 days. We can't really judge that at this point of time. So what are the levels that I'm looking at? Since I am kind of done with this view that wave C is over here, then I would like to calculate the Fibonacci retracements, and the 38% comes around 25,700. So just in case Nifty wants to drop, it might just drop another 200 points lower from here, and we would still be a part of this A, B, C, D, E structure. What I would really like to see is do we really get that support over 25,700 levels? And if we do that, that would be a sign that wave D is completing and we are starting another round of upside on the higher side in wave E. So this is the bullish view that I'm having. If I look at the daily charts, then I could very well see that we have closed just at the crux of 20 EMA, which comes around 25,887. So I'm not really sure if we are going to hold that level or not, and there are various possibilities. Do we really develop a triangular structure or over here, which is very common in wave 4, and so that is also possible that you go sideways. But looking at wave B, I am not really sure if we are really going to go sideways from here, or do we really go 200 points lower from here. So let's give it a benefit of doubt that Nifty were to fall a bit lower. Then what are the viable support levels that I'm looking at? So a very strong support zone comes in around the 40 moving average, which comes around 25,663. That's roughly 660 to 890, 230 points lower from here. So by analyzing daily chart, I get a level that is 151 to 200 points lower from here, and on hourly charts, that is almost 250 to 200 points lower from here. So even if it were to stay sideways over here, you would really see the 40 moving average catch up with the Nifty, and then you go sideways for a few days, or do a 1 or 2 day knee-jerk reaction, and then you again start in wave E towards 26,400, 26,500. The real question is is where does my view negate that this is no longer wave D and this is just a bigger correction, let's say ABC in wave X, and you really go down from here. The possibility of that happening is very slim, because last time I saw the data, FIs were, they were short around 1,90,000 contract towards these levels of around 24,600, 500 levels, and from, as if we compare the FI shorts from this level to this level, they have cut almost 40% of their shorts. I'm talking about FI's future, net index futures short. So you have already seen a 40% reduction in their short position. So this rally was entirely fueled by short covering rally. So whenever you see that, and whenever I see some sort of sideways action, and then even a small breakout on hourly would really pump Nifty higher, 600, 500 points higher from here in wave E. So the point I'm looking at, the point of invalidation, is obviously below the trend line support of wherever it comes. So you do that big move, then you no longer are in an uptrend, and you develop this view that you did just a counter trend move and you are going to go down. The chances of that happening are very slim. That happens, that the possibility of that only and only opens up if you go below 25,663 or wherever the 40 moving average is. If that doesn't happen, we stay in wave D and we head higher towards 26,500. That remains my primary view. Thank you.